All right, we're back. It is today, 4/22, which is April 22nd, Wednesday, 2026. It is 2 something right now, so I am recording this a little bit later, um, than usually I would, but I got a little busy in the morning. And yeah, so quick recap of today. Honestly, today's presentation was kind of off and kind of wonky. Honestly, well, I took a loss today for one, but also today was kind of a hard read as a whole. But also, I mean, I on my part, I did mess up, which is one thing to obviously consider. But um, beyond that, I think it was debatable. But today was just honestly really really weird. Not to say that it wasn't like it wasn't clean. I wouldn't go ahead and say it was clean, but I think it was very manageable. I think I just kind of messed up on my end. So just to quickly get into it and just kind of recap. So today, I'm at open. If I'm just looking at the 4 hour, right? If I'm looking at the 4 hour here, we're obviously very bullish. Why? Because for one, we obviously have this move down sponsored by this 4 hour gap. We expand up higher. We take out this external liquidity above us here. Off of us taking up this liquidity here, which for one was an SMT, which was yesterday created yesterday. We have this S&T once again with the S&P. We take out this high on Nasdaq. We don't on the S&P. From there, we reject off down here, take out this internal liquidity down here, and we also do respect zero point 0.6 to zero point 0.7 of Fibonacci range. We have a very nice wick into the 0.6 to zero point 0.7 and shoot up off of it. Additionally, we leave these relative equal highs here at open. So 9:30, no, 9:30 open soon. 9:30 open soon, right? And we left these equal highs. So at open, I was definitely looking to take longs. I think that was kind of obvious here. Longs obviously on the higher time frame, longs towards this draw. But I was a little bit open to maybe taking sells. And even though I was kind of leaning for longs, sells were obviously definitely in play. Very obviously because we have London low sitting here and Asia low sitting down here. And we have this trend line liquidity sitting right here. So that could very obviously be a sell model as well, right? So I will say though that at open I was looking for longs. Um, well, because in this case, yes, we inverse this gap here, but obviously we re-inverse this gap right here, reestablishing the bullish bias here at the 9:30 open candle. Right, so boom, we re-inverse this gap here in the 15 minutes, and so at that point I'm like, okay, cool, we're probably looking to take longs here. So I was looking for longs initially, right? So what I was really looking for most in at open was to hopefully see us tap into this 5 minute gap right here and use this as a sponsor level for longs. So that's what I'm looking for initially at open, and very obviously I'm targeting these relative equal highs we left behind. With on top of that, once again, bias being bullish overall. So we tap into this level, but in this case, very obviously we inverse it. We inverse it pretty strongly here. So this is no longer a very valid gap here, right? So what ends up happening here is that because we failed to have this 5 minute gap, that doesn't automatically mean to me that I'm looking for sells off bat, but it does mean that we can look to maybe potentially take some sells. Really does depend on how we react off of the zone. Because technically we come back down, we could just resweep these lows here and expand up higher, given that the higher time frame is bullish. And so that I'm not confident enough for sells here just yet, right? So what we end up waiting or end up happening here is we end up forming this 5 minute gap right here. This was basically my determining idea as whether it's a sell or a buy. If this gap holds, then that means that very likely we are looking to take sells towards G's draws down here and London lows as a session liquidity pool. Correct? If it doesn't, then we're obviously trying to go higher, right? So in this case, what I'm thinking to myself is okay, if we're bearish, we're gonna see an entry model occur here, and if not, we're gonna push right through it. So what I'm waiting for here for us to do is for us to tap into this IFEG, into this FEG right here, looking for a potential entry for shorts here, because not only have we already inversed the bullish gap, we form a bearish gap, and if this bearish gap holds, then we're probably going to be looking to take sales off at this level. There's no other higher time frame PD arrays here, like 15 minutes or anything of the sort, that are really holding any potential, value towards us here. So yeah. So here I'm looking at the 1 minute to see if there's anything that appears here for us to take shorts off of here. So nothing appears here. We do get this one candle right here. Just kind of waiting here to see something pops up. You have this large leg here. We tap into this, tap all the way, fill in the 5-minute gap here. 5 minutes still fully intact up until this point. We respecting so far. So what happened here is that I really like this rejection leg here. So not only was this a 5-minute support, 5-minute FEG being supported here for shorts, we also respect consecutive encroachment of this 5-minute gap, and this was a really strong rejection candle here. Additionally, we have an SMT right here between, I believe is this, yeah, between this candle right here and this candle right here, we have an SMT between the S&P and NASDAQ, which is even better for additional confluence. We sweep the high on the S&P, we don't on NASDAQ. 5-minute gap is being held, very good, cool. And basically what my entries I'm looking forward to is, yes, we have this 1 minute inversion gap right here, but like I always like to do, I like to couple that with a CISD. So basically this is where basically things go wrong for me. So I think so far up until this point, it's looking really good for sells, right? If I end up taking if I were to have taken a market order entry, likelihood is I would have taken a market order entry once this inversion occurs. So probably would have taken a market order entry here, stop loss at my high here, and just targeted London lows down here. Boom. But as at least up until now, I've been trying to use limit order entries for the most part. So I've been kind of stuck to using those, and that's why also I use CISD additionally to make my entries, because I like to see a pullback into the last leg of the CI, in this case the one that changes to the delivery leg, and deliver from there, right? So had I been doing this, is probably what I've been done here, and I probably would have gone break even at this level right here. If I were taking a market order entry, right? In my case, I'm not, right? So I already have an IFEG. What I want to see for additional confluence is a CISD occur right here, right? So we don't get anything yet. So this is what happens basically. This is what happens right here. Let me go back a little bit real quick. We'll go to right here. So I'm waiting for a CISD to occur. We finally do get the CISD at this candle right here, right? That means that I would put my entry order at this level right here, with my stop loss at the high, and my target being the same exact one down here. And I'm cool with aiming for a little 1-to-1 RR. In this case, it's a 1 to 1.2 RR. That's minimum. Where I basically messed up, and I guess it's something I'm still kind of learning, but also something I'm trying to like learn and adapt to, is that because I take changing the state of delivery orders, usually what I do is I go break even once we break below a certain level, right? So that means if I had taken a market order entry after the CISD occurred, aka right here, right? So it would have been something like this. I wouldn't have taken this because of how the RR is bad. But hypothetically, if I taken a market order entry after the CISD, my break even would have been once we body close below this break even point right here, this swing low. Meaning that I would have brought this back down here until I see a body close below this level. So because usually I do body close for my break even point, that means that I would have still technically been in a trade if I taken the a market order entry, right? So we get this wick into this level right here, and I still have my order here. Even though we took out this internal low this internal low right here, I still have my order for sells for shorts here located. I believe I'm saying I went in with 3 contracts. Yeah, my order here is still intact. Once again, why? Because even though we swept this low right here, generally speaking, in my mind, is like what I think is like if we don't get a close below it, then technically it's still a good run. If it's truly going to be selling off. In this case, obviously, so I keep my sell order here to get fulfilled. It gets wicked into. Once again, stop loss is all the way up here with TP sitting all the way down here. Like this. So we get a pull back into this level, and basically I let this run. I let this run. Once again, the idea was that I don't go break even until we see a body close below us. We could get a rejection off of this level, but oftentimes in my mind, what I'm thinking is we'll push up and then we'll continue to deliver back down. In this case, we very obviously don't do that. We just kind of stall a little bit. Eventually, we do kind of come back to this level one more time. I'm looking for us to deliver down, and we get stopped out, obviously. And we obviously, very obviously, up here we tap into this here for longs. Boom, right here, just like that. Um, and yeah, so I got stopped out. I took one L in the day. What I could have done better or want to do better is, for one, see if still taking entries off market order entry slash limit order entry really does make a difference. Because in this case, I guess the things that the limit order entry has a better fill as a whole and more definitive, but also the RR thing is a little bit weird and funky, and also really determine where my break even point should be. I think what I might start doing is that maybe not see a body close, but a wick should, should be fine, because technically speaking, the moment that we get a CISD and the minute that we get a an IFAG, we should begin to deliver down. That basically should tell us, hey, listen, we're done sweeping liquidity up here. We're ready to deliver back down. And we should flush through these levels. Maybe see some stalliness, fine, but not rejection back upwards. So I think what I'm gonna do in regards to fixing my my model a little bit is, whenever I take entries, the minute that a swing low of some form gets tapped into, maybe it invalidates my idea. But then that would mean that I probably have to take a market order entry. Although this can maybe be part of the model, if that makes sense as well. Maybe it was just a bad idea. It was just wrong concept as a whole. So maybe this is kind of something I want to maybe back test more, or maybe just work on, try out, test, and just figure things out. Once again, I've been focusing more on forward testing as opposed to back testing, because I think forward testing has just helped me a lot more, and I can actually work on improving these things. It might cost a little more money, I will say that, but I think it definitely does work out in favor. And once again, in this case, one could argue that the obvious draw was above us, but I don't think it was that obvious. I think we also had very good reason to go down as well, take out this liquidity, and then expand upwards, but that wasn't the case. And like I said, I think this trade was good up until we took out this level right here. I think this trade would have been great had I taken an entry maybe after this inversion, maybe right here, stop loss at the high, and gone break even the minute that we worked into this level right here. I think if I had gone break even the minute that we had taken its entry here without having tapped into the level yet, would have been good. And also, I probably should have avoided taking an entry after we wicked this level right here, since that was a potential reason to shoot upwards as well. So yeah, with that being said, that was that. Like I said, I think I think the idea wasn't bad up until a certain point, but after that, me taking an entry at this level really made no sense at the end of the day. And yeah, obviously targets were up here, and well, it is what it is. So once again, I'm just gonna keep up studying, keep on practicing, keep forward testing a little more, maybe back this a little bit as well. And hopefully the next rest of the week, we could do a little bit better. But yeah, that's that for today, and deuces.